This is Mark the Meerkat in for D7 with the weekend review, good through April 15th, 2018. Tax day. That's right, that's coming up, and you got to file by Tuesday the 17th here in the U.S., so get those taxes ready, ladies and gentlemen. It's a tough problem to have if you're making a lot of money trading, that you do have to pay the tax man. Necessary expense, unfortunately. All right, let's take a look here at what happened on Friday. Let's look what happened for the week, and then how that all fits into, and we'll even take a look at the month now that it is half over. So first of all, let's take a look at the numbers for Friday. Market was down. It was up initially. It went way up, and then it dropped down. It did come up off its lows. Minus 0.3 for the S&P, for the 0.5 for the Dow, minus 0.5 for the NASDAQ, and also for the small cap Russell. Bank down 1.3%. But wait a minute. JP Morgan and Wells Fargo, they reported great earnings, and then they've shot up, and then they drop throughout the day. And you can see that bank was leading the way down. That is more bearish. And then we have the VIX down, and it closed at 17.4. We are below 20 now, and we'll take a look at that on the chart to see what that has to do with it. We had gold and silver. They popped up, and then we had the dollar here. It was down. It was not confirming the move. So kind of an odd day to end the week. We have, for the week, we got the Dow up at 0.18, and then we have the S&P up 2%, the NASDAQ up 2.8%, but oil, holy mackerel, oil just took off, up 8.6% for the week to a 3.5-year high, closing at $67.39 on the WTI contract. Wow! So we've had quite the boost in oil now. There was the threat of missiles flying into Syria. Well, over the weekend, yes, there was a international coalition that we did fire missiles in strategic areas into Syria. So we'll be looking for what happens in the market open here. You might want to look at futures on Sunday afternoon to see what happens. Get a little preamble of what may happen as market reaction. Again, what you think and what I think about it is completely irrelevant. It's what the overall market believes, and that will move the markets, not what we think. So here we are on the daily S&P 500. We had a choppy week here. We did end up nicely for the week, but almost every other day, bam boom, bah, really tough. In the Wednesday video, I talked about the fact that we were coming up off this 200 moving average. On Wednesday, we had dropped. That Thursday, we came up, and then we opened up nicely on Friday, and then slam back down here. A bearish engulfing. That's a little bit on this run up here, and that's a possible reversal candle. And it actually broke above this purple line here. That is the closing line from 2017. It popped above it and then dropped, and we did close below it there on the S&P 500. This is the daily chart on that. Let's take a look here at the Dow Jones Industrials. Again, a symmetrical triangle also. It had broken above it on Thursday. Nicely done. Popped way up here over 230 points. It was up here, hit its head right here on the 50 moving average, and then drop, and it tagged down here these moving averages, and then closed above this support line here of the symmetrical triangle, and again down for the day. There was over a 400-point swing on Friday on the Dow. Again, volatility is still in, although it's starting to reduce it. Now, let's look at the daily chart here on the NASDAQ, and we've got it's coming up and up and up, and again, it's got an engulfing candle here, possible reversal candle. And by the way, I didn't mention this in the other ones. We have on these runs up here the last week and a half, it is also running down on volume. That is a little more bearish there as well. And then we've got the small cap Russell here, and it came down and tagged right off of the 200 moving average, and then is rising, and then Friday, big huge up and back down. Engulfing candle here, so possible reversal candle, just possible, doesn't mean that it will. But we've had up days, down day, up day, down day, over and over again. But right now we're doing mostly up, but again on decreasing volume on all the markets. Bank can't go anywhere without them. And again, I mentioned bank. The earnings parade has now begun, ladies and gentlemen, and And we had a couple of the big banks start, and then there'll be a few more here early in the week reporting. And look at that, and it shot right up. They went up, and then they just crashed, bearish engulfing on that as well. And it was very disappointing. It led the market on the way down there. Now we have the VIX. Let's talk about the VIX. Now the good news with the VIX is it's been basing here above 20, which is very volatile, which is why you've been getting these huge swings in the market. And now, and because it represents fear, and now it's starting to drop. And actually on Thursday it dropped, and on Friday it dropped. Even though the markets were down, the fear came out of the market. We're now at 17.4, below 20. Well, you know, it doesn't mean that it can't shoot up again here. Again, geopolitical news like rockets flying into Syria can cause that, and so we have to be aware that even on a down day, the fear came out of the market, starting to subside a little bit here. We've been up here, and this is why we've been having these huge swings. All right, let's go to and let's do the weekly charts. So here's the S&P 500 on the weekly chart, again in a very strong line of support here, and we are in a symmetrical triangle because we do have a swing high here on the weekly chart, and it's bouncing up off of this support line here last week, and it tagged the closing line and then pulled back here during the week. And so we do have an up candle here, so we are starting to look like it's starting to roll back up as a possibility. But again, within a symmetrical triangle, lots of resistance up here. Let's take a look at the Dow, and Dow looks very similar here, and it is in a symmetrical triangle as well. And it went up here, tagged its closing line from 2017, pulled back, and just underneath that line of resistance. Interesting on the weekly chart. And then we have the Nasdaq. Now the Nasdaq, it had pulled down to its closing line from 2017. It bounced off of that last week, and then but hitting its head here at the 20 moving average on the weekly chart, as well as the other moving averages, and pulled back up for the week, and now it could be a possible bull pullback here coming off of this major line of support. Then we have the small cap Russell, and again it hits its lower line here. It's just starting to form a symmetrical triangle here because we can connect two swing highs, and bounced off of that, and it is now back in the positive for the year. This week now it did close above there. So we have the Nasdaq and the Russell in the positive for 2018, but the S&P and the Dow are still negative for the year, even after that big up in January. And now let's take a look at Bank on the weekly, and it is not in a symmetrical triangle. It's just starting to form a channel up here, but we're on the lower part of the channel. It's struggling to get off of the bottom. It went up above the 20 and then pulled back for the week. Again, the big down day on Friday really kind of pulled us back there. Hey, before we get to the monthly charts, I just want to talk about how would you like to have coffee with either D7 or me, the Meerkat. Well, we are going to be doing some meet and greets at a coffee shop here at different spots in the U.S. So if you want to go to groktrade.com, that's right, groktrade.com, and then right here it talks about our mentorship program. I'll just tell you what, we just updated this page. If you want to find out what our mentorship program is about and want to learn to trade the Grok trade way, just go here, man. It's just some fabulous write-ups about that. In fact, we have a mentoring program coming up. We do it online here, and in 2 weeks we'll be having one online over the weekend. And then in June, the 16th through the 18th, we'll be doing it live in Vegas. Same content, but you'll be in a room with other like-minded traders. That's June 16 through 18 in Las Vegas, Nevada. Again, go to that site. You can read all about our mentoring program, and you can look into if that's going to be appropriate for you or not. But down here, keep going down here, some free webinars here on how to build wealth and that type of thing. But right here, you can have coffee at a local coffee shop with either Des or myself, and I'm going to be doing Indianapolis, Chicago, Columbus, Cincinnati, Louisville, and Des Moines, Iowa over the next couple of months here. So if you're interested in that at all, just go ahead and put your name and information in here, and which location that you're interested in. I'm just sitting down and just having a chat. That would be you can hit submit there. Again, we have our privacy here. We're not going to be selling your name to anybody else. Don't worry about that. So again, a little bit meet and greet if you'd like to do that with D7 or myself. All right, so then let's go to the monthly charts now. And this is the monthly chart on the SPY. And we are forming a bull flag here. We're just starting to form it. It's pulling back or a bull pullback. So it is starting to come back up again. The month is only half over. We have to recognize that. And so, but it has pulled down here. It's almost forming a hammer here. So that's a possible reversal candle as well. And again, you can see we're just below where the profitability would be for the year here. But again, could be a bull pullback here. So it's starting to look a little bit bullish. Looks like we might have put in a bottom here. Let's take a look at the Dow. Very similar. And again, could be coming back up here. We've had this nice wick down below. And the NASDAQ here looking a little more bullish, and that is it's come back to its closing line from 2017, starting to work its way back up. Again, the month is only half over, so we just have to recognize that. And then the small cap Russell here, it didn't pull back as much as the others, and now it's starting to work its way up here. This line is actually from the monthly or the weekly chart, and so you can see we're starting to go back up. We're back into profitability on that one for the year for the index. And how about bank on the monthly? Look at that, it's going sideways. Another doji indecision here on bank. We have to have bank going with us here, folks. So now we are right in the beginning of earnings season now. The parade has now started. And the big banks, a couple of them reported this past week, and now we're going to be getting lots of reports starting here, and it's recording for the whole first quarter now as they begin to roll out. So be aware of any positions you're in when their earnings are. Do not trade over earnings, or do not trade unprotected over earnings. Your stops will not work when the market is closed. They only work when the market is open. The Achilles heel to using a stop loss is gaps in the stock. So if you have a known event called a earnings, that's a known event, you don't know how it's going to turn out. You have a 50-50 chance as to whether or not the earnings themselves is bullish or bearish, right? And then you have a 50% chance of whether the market interprets it as either bullish or bearish. See the interpretation of what happened. Because I've traded before where it had record earnings and record revenues, and stock dropped 10%. Because their projection for the next quarter was that they may not set a new record, and it dropped 10%. What can you do about that? Nothing. So again, stops do not protect you for gaps overnight. Just be aware of that. So you can do protection, can hedge if you want to hold on to the position through earnings, but other than that, you are gambling with your money trading over earnings. That's our recommendation. For really long-term earnings, I've had some earnings for years and years in my really big long-term account, but I do have stops in place if they make a major fall over time. I am protected, so I always have protection in place, but just be aware that stops do not protect you when the market is closed. So this is Mark the Meerkat. We are currently in a mild bullish market. We are in a confirmed uptrend still, but it is mild, and with the volatility still, even at 17, we can expect some big moves up, some big moves down here. Cash is okay to be in until this market has a strong trend one way or the other. Don't feel like you have to have your money in the market at all times. When the odds are not in your favor, it's okay to be in all cash. Hey, just remember that trading is an odds and probabilities game. As Clint Eastwood says, if you want a guarantee, buy a toaster. Trade well, and may your winners run.